Hi, welcome to this video today, which is all about the truth about Forex brokers and how they make money from you. Now, they're all going to bet against your position. A lot of traders think it's just market makers who do this. It isn't. ECN brokers do it as well. I'll explain how they do it in a moment. Now, they're going to make money when you lose. Is that a bad thing? No, it's the reason you get a huge advantage from brokers, which I'll explain in a moment. I'm also going to go through some points in relation to basically tactics that brokers use to encourage traders to lose money more quickly and also generate them more fees. Now, what we're going to do is we're going to go to a storyboard and discuss all these points in more detail. All right, let's have a look at 10 points in relation to Forex brokers and how they make their money. Now, point number one, very important. Dealing fees that you pay in the market are so low that brokers can't make money from dealing fees alone. I mean, from a retail trader point of view, it's fantastic. If you look at the spreads that you get, yes, a real advantage to us as retail traders, not an advantage to the broker. So they're going to have to get their income another way, so to speak. And they are all going to basically make money from client losses. Now, first of all, market makers. Everyone knows they bet against traders, and you see a lot of comments online about how the broker hunted the stop to get the client equity. Do market makers, if they're regulated, hunt stops? No, of course they don't. Market makers have just got a simple statistic they keep in their mind in relation to retail traders. 90% of retail traders are going to lose 90% of their money in 90 days. And that statistic, as a rule of thumb, is constant over time. So they bring in $1 million on average in 3 months' time. They're going to have 900,000 of that. So that's a good deal for them. They don't need to hunt stops. They can just sit there, let the market do its work against retail traders, the majority who are always going to lose. We know that. It's up to us to beat the odds. The market makers and brokers don't care if a small minority of traders make money, because they know they're going to make a healthy income from the ones that lose. It's very much like the casinos, how casinos operate. They know that maybe on a roulette game at some point they're going to have to pay out a really big amount of money to a player. But they know the majority of people who come in their casinos are going to lose money. They look at the big picture. Now, in terms of ECN brokers, they say they pass your trade, onto a number of liquidity providers to get you the best fill for your trade. That's how they present themselves. Okay, they do that. That's not the only way they make money, because what they do behind the scenes is they'll have a deal with the liquidity providers who are market makers who they pass the trade onto to split the client losses. It should be common sense to retail traders, ECM brokers, for small deposits, retail traders generally, they can't make money from the dealing spreads as low as they are. Okay, basically that's the way they do it. I think, possibly they should be clamped down upon a little bit in terms of the way they present themselves, but it's not a problem to us. We get great dealing fees because of the way the brokers bet against us. Now, in terms of broker platforms, they tend to encourage traders to lose money, beginners who are a bit naive. If you look at a broker platform, most of them, they look a bit like online casinos to me. And if you go in, you get the charts. Okay, for this, just one example, you've got daily charts, weekly charts, etc. And then you go down. You can go down to 5-minute charts, 1-minute charts. I've even seen one broker with a 1-second chart. That is to encourage traders to trade more frequently. You can't make money trading off a 1-second chart or 1-minute chart as a retail trader. You're just going to get caught in the noise. But brokers want to encourage traders to look at price, and you will pay attention to price in small time periods when it's moving in front of you. That's the way we're programmed in our brains. So they do want traders to obviously trade as much as possible, so they get a little bit of more from the spreads before the client on average is going to lose his money. They welcome algo traders and scalpers. I think that's hilarious when I see that on a broker platform. It's obvious they're going to welcome these traders. Scalpers, well, they're on too short a time frame. They're going to lose money. Okay. Algo traders, there's no mechanical trading system available to retail traders that can make money. Okay, it's just they don't make money at all. The only algo trading systems that really make money are the high frequency trading programs. Yeah, the really quick systems used by banks and hedge funds that do hundreds of orders in the blink of an eye. They've got the advantage of speed. But any retail trader who thinks they're going to make money that way hasn't done their research. Broker education and research. You'll go to many brokers and they'll say, you know, learn to trade like a professional with our expert help. Yeah, they give all these guides and they've got analysts and so forth. The guides just basically teaching textbook technical analysis, which isn't going to work in the real world, and their analysts basically just reflect the majority view most of the time in terms of currency pairs. They don't or couldn't trade successfully. Yeah, if you want to be a professional trader, you do it on your own. You don't expect to become professional by learning from a broker. Okay. Also, big way of making money for brokers today is social trading. It's a total scam in my view. You're supposed to follow winning traders, and they show the best traders, okay, that are supposedly trading with them. Some are actually plants, and they say, you know, X made 150% last week. You can follow him, or Y made 200% in 3 months, or whatever it might be. What they're normally doing is they're either plants, or basically they're putting up traders who've made money in short periods of time. Yeah, a lot of money, which means they're probably over leveraged or lucky. They're going to basically blow their accounts up and the traders following them. Then they'll replace the top trader that's blown up with another trader who's got lucky in a short period of time. Anyone who thinks they can make money following other traders is very naive, in my view. Social trading should be avoided, obviously. Leverage. How much leverage do brokers give today? They used to give huge leverage, particularly in Europe, where you could get 500 to 1. Regulators have clamped down on that. It's now 10 to 1, US similar. And a lot of traders still want high leverage. Okay, now they will then go to unregulated brokers offering 200 to 1, 500 to 1, etc. It's not a good idea. Unregulated broker, you've got no protection, and also that leverage is going to destroy your account. Too much leverage kills. But if you leverage up at a broker, they're more than happy. Bigger the trade size, the bigger the fee income, isn't it? And the more chances you've got of losing your money to them. How much difference is there between brokers and the best? When I look at brokers today, regulated brokers, they're all pretty equal, okay? Most of them offer a really good service to us, okay, which is the best. You're going to you have to decide that for yourself. Use a demo account, but there's just so many good brokers out there in terms of the service that they provide. You want to focus on the platform. Obviously, the spreads, they're all pretty low. I normally, I'm choosing brokers, focus on how many pairs they've got. I want to trade as many pairs as possible, have the opportunity to, because that will increase the amount of profitable trading setups you'll find. But regulated brokers, all pretty good in my view. Just try a demo account and then you'll come to the one that suits you the best. What your broker thinks of you, my experience. Really, your broker just assumes that most traders are going to lose. You don't really, when you're a broker, think traders are going to win consistently. A few are, okay? Sometimes, and this is my experience when I was a broker, you did get traders who would win consistently. And if they have big deposits, okay, that can obviously cost you money if you're betting against them. So what you would do is you just say, okay, right, this trader's proved that they're consistently quite a good trader or a good trader. We'll just hedge off their trades and take the spread off them. There's plenty of other traders where we can take the other side of the trade. Okay, so that's how Forex brokers make their money. And I would say that in today's world, certainly since I first started trades, I think there's a big difference between brokers back then and now. I mean, we used to pay such heavy dealing spreads. Today, they're minuscule, huge advantage. For us, use your broker in the right way, get the right education, and you could be one of the small minority of traders who are long-term profitable from the Forex markets. But that's the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.